entered the second half of the trading session, and now towards the closing of the day, we are seeing about 0.7% of a dip on both the benchmarks, the Nifty and the Sensex. Almost 500 points gone on the Sensex, 62,127 the current level. The Nifty was also slipped below the 18,500 mark. It's down 125 odd points. So where is this downtick really coming in from? If you see among the sectors, it's the banks that are down in trade. Apart from this, it's the metal stocks that are crashing. The IT stocks are the biggest laggards in trade today. Over 3% of a cut you can see there. PSU banks are seeing profit booking, over 2% cut for that one as well. Realty stocks down in trade, 1.8% as well. Apart from this, the autos are moving in the slow lane too. It's just the FMCG majors and the pharma stocks that are in the green, and barring these two indices, all of them are actually seeing this sell-off. Although there is a slight recovery from the lowest point of the day for the markets, but there's still a considerable amount of downtick that you are able to see. In case you want to know about the advanced decline ratio, the declines are heavier. Of the Nifty 50 stocks, 33 stocks in the red today, and among the losers you have HCL Tech, almost 7% down right now as we speak. Tech Mahindra, Infosys, Wipro, all of these tech majors down in action today, 3 to 4% down in trade. UPL also following suit, about 2% down in trade. Apart from that, from the metals pack, it's Hindalco, that's down about 2% as well. What's still holding up despite the overall muted trade, it's the stocks like Nestle, Eicher Motors, Dr. Reddy's, Titan and HUL that are still holding up despite the overall weakness that we have. Let's welcome our guest for the day today. Ambareesh Baliga joins in. He's the independent market analyst and a well-known face in the stock markets world. Welcome, sir, and thank you so much for taking out time for this discussion. First up, your take on the markets. We saw some bounce early this week, but we've again slipped into this negative territory. Help us understand that despite the overall, global market still in the green, why have we slipped today? And could this indicate sharper fall from here?
See, in fact, we have gotten a bit too expensive. If you see, we have outperformed in the last so many months. We were the best performing markets. And despite the earnings, if you see the last 2 quarters earnings, we have seen a slowdown. But despite that, liquidity was what was pushing the markets up. New highs on a more or less basis last couple of days. So I suppose it is time that people reach out to extent and in fact got into cash. Because even
Mr.
December
Baliga, there is some audio trouble that we are getting from your end. We'll try and fix that. I'll come back to you onto that as well. Let me just quickly tell in the meanwhile all our viewers about how the broader markets are doing at this point in time. The mid caps and the small caps that were actually seen doing pretty well yesterday, they're also down in trade. In fact, the small cap index is down by over 1% odd, 0.5% decline for the mid cap index as well. When you also see about talk about the India VIX levels as well, that's up, inched up about 2% odd in today's trading action. 13.6 is the level that we're seeing the India VIX at as well. Overall speaking, the whole lot of brokerage house reports, that is what we are going to be focusing on also in trade today, especially when you talk about the PSU banks and the IT space, which has come in radar of the brokerage houses as well. You can see the IT stocks have tumbled in trade today because Credit Suisse has actually warned of the valuation-led correction as well, and that's why you're seeing all the heavyweight IT counters dragging in trade today. Apart from this, there are some stocks like Som Distilleries that are in buzzing news today because the board has approved fundraising of about 100 odd crores. Also talk about the kind of stocks from the banking space that are in focus. Yes Bank has suddenly spurted about 12% odd. So, and about from that, Paytm is in focus after that buyback news. That stock is up in trade as well. And Kalpatru Power, also another stock that is among the top gainers in an otherwise weaker market that we are seeing at this point in time. In fact, let's also try and connect to our reporter Tanya Aneja, who also has a list of stocks on her list, on her radar, which are in action today. And all the buzzing action. We'll go across to her, but I think we have Mr. Baliga back with us. Mr. Baliga, you were talking about the market outlook that you see going forward from here and why this sharp fall. Could you please reiterate your point? Mr. Baliga, can you hear me? Okay, I guess we still have some audio issues with Mr. Baliga. We'll try and fix that yet again. But let's go across to Tanya and Asia to really figure out what exactly are the stocks that are moving in trade today and which are the stocks that are actually making news, and also the stocks are reacting on these news flows as well. Tanya joins in. Tanya, thanks for joining in. Help us understand which are the stocks that are on your list today. Okay, Tanya, if you can hear me, can you please share your list of stocks that you have on your radar today?
All, let's start with the IT pack only. So the entire IT pack is down today, and this is after Credit Suisse warned of a 10 to 27% valuation-led correction in IT stocks amid US macro headwinds. Now, it expects India's top four Indian IT companies to witness a 10 to 27% valuation-led correction, with HCL Tech likely to be the worst hit. Now, shares of HCL Tech took a beating today. They were down to the tune of 7%. And among the other names, it sees a nearly 15% risk for Infosys and Wipro, and 8% risk for TCS. Now, Credit Suisse also believes that there is a high risk of revenue cut for the financial year 2024 in case growth in the US slows down further. However, it believes that significant tailwinds on operating profits, including lower wage hikes, rationalization of wages, as well as the rupee's depreciation, should provide a cushion to the overall earnings of major Indian IT companies. So you can see that shares of HCL Tech, Tech Mahindra, Infosys, Wipro, TCS, they were all down in trade today. And the other stock we have is Paytm. Paytm is also in focus today. Shares were up to the tune of 7% today. The company said it would hold a board meeting on 13th of December to consider a proposal for the buyback of equity shares. Now, under a share buyback process, a company buys back its shares from investors or shareholders, usually at a price higher than the market price. Then shares of Triveni Engineering are also in focus today after its promoter and chairman Dhruv Sahni sold 1.7 crore shares of the company. That is approximately 7% of its total shareholding. Also, ace investor Anil Kumar Goyal was among the major buyers of Triveni Engineering shares. So he bought 18 lakh shares of Triveni Engineering, and also Society General also bought 14.7 lakh shares of the company, and that's why this stock is also in focus today. Next, we have HUL stock as well. The company is in focus. In fact, the stock was among the top gainers after the company announced its foray into the health and well-being category through investments in Oziva and well-being nutrition. Lastly, we have Bajaj Consumer Care shares. They were also in focus today. The company announced 80.89 crore rupees buyback at a price of 240 rupees per share through the open market route. Back to you.
All right, Tanya, thank you for giving us all that update about the stocks that are moving in action today. Let's also go across to another very big news that has come in. In fact, it's a big news coming in from the mutual fund industry. We actually saw the AMFI data released for the month of November that has indicated how mutual fund investors have invested in the month of November as far as equity mutual funds are concerned. We have seen that those flows have in fact turned out to be the lowest since the month of April 2021. On the other hand, the SIP contributions have actually hit a record high in the month of November as well. In fact, if you see the equity mutual funds, they have witnessed a net flow at 2,224 crores in the month of November. And this is as per the data released by the Association of Mutual Funds of India. This is the lowest inflow recorded since April 2021. Also in October, the same was registered at 9,253 odd crore rupees. However, if you see, Systematic Investment Plan or SIPs has once again hit a record high in the month of November, and that has witnessed an inflow of 13,307 crore rupees in this month. So definitely overall equity mutual fund inflows have reduced, but the SIP flows on a month-on-month basis for the retail investors that have indicated the consistent and the disciplined buying action from the retail investor. We have Mr. Baliga back with us. Mr. Baliga, we were speaking about the stock market's fall today and what could we really anticipate going forward from here. Your take on the market outlook?
In fact, at these levels, I'm a bit cautious because markets have really gotten a bit too expensive. and they have been moving up last couple of months basically because of the liquidity flows. Just now you've been talking of SIPs hitting new highs.
Hmm.
So when the money comes into mutual funds, they need to invest. They really can't sit on too much of cash. And FIs also, who are sellers for the last so many months, had turned buyers. If you see the last 2 3 months, so clearly liquidity was pushing up the markets. And like I said, they had got a bit too expensive, despite the fact that the last 2 quarters, the numbers have been quite. They were not really too great as such. And again, December quarter also, I'm not really expecting a major uptick. So
Okay.
looking at all that, markets would have, got more expensive if it moves up more from here. So I think at this point of time, some of the smarter investors clearly are booking out to an extent and getting
Hmm.
into cash.
Hmm.
And you talk over the next couple of weeks. In fact, I see the markets correcting, and we really may not see a major rally before the budget, because normally you
Okay.
see a pre-budget rally. So I think one needs to take at least the profits off the table, get into cash to a certain extent.
Okay. Since you were talking about the SIPs as well, I did speak to Mr. N.S. Venkatesh, Chief Executive AMFI, a little while ago to understand more in detail about the data that has come in. His point of view of the equity inflows slowing down in the month of mutual funds was that people perhaps are taking out money for consumption since this is the festive and the wedding season. But do you also think that a part of it could also be people wanting to shift out of equity into debt at a time when we have been seeing successive rate hikes from the RBI, and debt investments perhaps are looking better off?
Absolutely, because the like interest rates, have started moving up. FDs are giving you better returns than what they were some time back, and at the same time, people have made good money in the market in the last 2 years. So surely they must be taking off, equity money out, and because of which we are seeing the lump sum investments, which are discretionary. There, the figures have come down because SIP investors, by and large, are called lazy investors because they normally don't move in and move out very quickly. So that continues to rise. But lump sum investments clearly would be down at least for a while going ahead.
Okay. From the macro point of view, sir, we have seen that the RBI policy is now behind us. The US Fed, we are definitely awaiting. At this point in time, the oil prices are at their lowest level this year. How are these macro indicators really looking from the market standpoint as we move into the new year?
See, sentimentally, this is quite positive, especially oil prices coming down is very, very positive for us because, as far as the import bill is concerned, that's the largest for us. That's the largest component for us. And at the same time, when we're looking at the rate hikes, maybe we may have one more set of rate hikes, and that could be the last of it for the time being. And I think that is also positive. But at the same time, we should understand that the markets have run up so much. I think we have already run up beyond the valuation which would be acceptable to a long-term investor. So from that point of view, saying since most of the positives are already factored in, this may not really have a major bump up for the markets. I think somewhere it has to cool off.
Okay, understood that. We were also discussing some of the buzzing stocks a little while earlier, and we did see that IT stocks are absolutely tumbling today. And this after Credit Suisse really warned of the valuation led correction. And this at the time when we were just beginning to think that perhaps the downturn is done and dusted, the worst may be over for them, and perhaps the IT stocks would have hit their bottom. What is your own take on the IT space?
IT space, I think will have at least either one or two, like 3 quarters going ahead, because clearly there is a global slowdown, and global slowdown clearly will ensure discretionary order flows will also slow down for the IT space. And the other thing which was possibly helping them to a certain extent was the rupee depreciation. But that, there again, we have seen that rupee, after going to a certain level, has started appreciating, and it's quite stable at the current level. So, for the time being, I really don't see anything positive for the IT space. Even the costs are going up, attrition levels are decently high. So, I would be a bit cautious at this point of time as far as IT space is concerned. But yes,
Okay.
I'll keep my eyes and ears open because there could be opportunity over the next 2 quarters. And one should be looking at, like stocks like KPIT or Tata LXE, which are
Okay.
basically into the futuristic of EVs.
Okay, understood. From IT to now, the more performing sector recently of late, the banking space. Even today, we are seeing, some of the beleaguered stocks like Yes Bank shoot up 12%. The PSU banks have been having a ball for a long time. The private banks are now looking like they're joining the party as well. Top global brokerage houses are sharing bullish reports on an everyday basis here. What is your take on the small PSU banks and stocks like Yes Bank? Could they become the future multi-baggers, or is this just a frenzy that we are witnessing?
I've been bullish on the banks for quite a while. Initially, it was the private sector banks which did decently well, and then it's only recently that the PSU banks joined the bandwagon, and quite a few of them have actually, given you 50% returns. Some of them have nearly given you 100% returns in the last couple of months. But at these levels, I feel most of them are fully priced, overpriced, and there's some catch-up happening. As far as the smaller private sector banks are concerned, we have seen IDFC First doing well. We have seen South Indian Bank nearly doubling in the last 2, 3 months. And now, in the last few days, we have seen Yes Bank also moving up decently well from those 14, 15 levels. Now it's close to 20. Uh, as far as these banks are concerned, I think we can see a bit more of a move from here. For example, something like a Yes Bank can go to levels of about 23, 24. South Indian Bank can go to levels of about 20, 22. And IDFC First can go to levels of about 65 to 68.
Okay.
But then at these levels, I would not really suggest buying fresh. Possibly trying to hold for those who are having it. And if you're talking of the larger PSU banks like Canara Bank or a Bank of Baroda or a PNB, possibly it's time to book out.
Okay, okay. Apart from the IT and the banks that we've discussed, which are the other sectors that you're bullish on, that you remain promising, that you think are promising for the next year, 2023?
I would clearly be quite bullish on specialty chemicals and agrochem,
Okay.
which did well during the COVID period, and then after that we have seen a correction in 2022. I think this will be the sector to be looked at in 2023 because China plus one is really playing out extremely well, and quite a few of us specialty chemical leaders are actually global leaders now. So
Okay.
I think this is the case to be looked at. And the other space could be auto ancillaries. Although they've already moved up quite a lot, maybe I would wait for a small correction out here to buy into auto ancillaries. And the third sector could in fact be a dark horse, pharma, which hasn't really performed
Okay.
too well in 20. I think this could be one sector which could perform well going ahead.
Okay, and also your view on the new age tech stocks. We have seen the kind of wealth destruction that we've seen this year is something that has really got all the investors who, were euphoric at that time of listing in the last year. At this point in time, they just don't know when is the right time to exit and how do they book their, massive losses at this point in time. But right now, if you see, there have been some bounce backs as well. We've seen some of the companies really take some major decisions like a buyback within the first year. Paytm has, announced this buyback. Nykaa announced its bonus shares as well. How are you looking at this entire space, the way these new age tech stocks are really moving?
In fact, after the correction which we've seen in the recent past, some of them have come to that level where I would like to buy. For example, something like a delivery.
Yeah.
They're the leaders in that space. Growing at about 25, 30%. Why? And expected to be EBITDA positive, real EBITDA positive, not adjusted EBITDA, real EBITDA
Okay.
positive
Okay.
by FY25. I think this is one stock to be looked at. Policy Bazaar is the other one. Nika, I would still be a bit skeptical. I would still wait a while longer for Nika to come down further. Paytm, just because of the announcement of buyback and the recent buy reports by some of the brokerage houses, the stock has moved up. But I would possibly look at a Paytm at levels closer to about 450, 460.
Right, absolutely. As a off late or a recent trend that what we're witnessing is that the broader and the broader markets, including the mid and the small caps, they have started to pull up as well. Is that a space that you would be focused on as we enter the new year? Is this the time to actually look at increasing exposure here?
So quite a few of these, I would say worthwhile mid cap and small caps have already moved up. So I won't really, buy fresh into that space at this point of time. But then whenever you're buying a mid cap or a small cap, I would always say that understand the stock very well. Just don't buy on tips. One should understand the sector, the management, and the company well before buying it.
Okay. Stepping into 2023, what should be investor strategies now, according to you?
I would say possibly wait for a correction before really buying fresh. And again, I would clearly look at the sectors which we just discussed,
Yeah.
and that's where I would be increasing my exposure.
But on the index level, would you like to call any levels that you would want to see or you expect to see? People were saying Santa Rally could see 19K coming in just in the month that we are in right now. But that
Right.
looks vaguely impossible at this point in time. Your thoughts here?
Yeah, in fact, just about 4 5 days back, levels of 19,000 was looking possible.
Yeah.
Uh, Now it seems a bit difficult, no doubt. But then you really can't say for sure in this market. So in case we see 19,000 levels, I'll possibly sell a bit more from my portfolio. And in case we see a correction, a good correction in the sense could be 17,000 or below, maybe even 16,000 is what some of the analysts have been talking about. I think at those levels, possibly get fully invested because that really means a correction at the index level of close to about 15% or so. Yeah, about 10 to 15%. But then
Okay.
at the stock level, you could see deeper corrections.
Okay.
So that makes sense buying at lower, holding on
Oh,
possibly for the next year or 2 years.
okay. So if I have to just understand from you, say for example, if somebody has 10 lakh rupees to invest in this current market, where exactly that money goes for 2023?
Sector-wise, like I said, for a portfolio, typically 50 to 60%, or maybe 40 to 60% should be in blue chips and large caps, which clearly is a no-brainer. It's the balance 40 to 60%, depending on your risk appetite. You should be investing in the mid cap and the small cap space. And again, in that space, I would prefer to go in with the sectors which we just discussed, specialty chemicals, agrochem, auto ancillaries, because you won't get autos in small cap and mid caps. You'll actually get the auto ancillaries in that space. And like I said, pharma could
Yeah.
be one dark horse for slightly longer term.
Okay. And in terms of stocks, say if I have to go in, do I go in with the steady long-term performers, the high blue chip stocks of say ITs and banks, or and have Adani's, which has been performer, the Adani Group stocks, and some new age stocks like you pointed out, or is it going to be something different?
Again, when you talk of the Adani Group stocks, that is basically meant for a trader. Although it has created so-called wealth for the last 2 years, I don't know how many people really created wealth out of the Adani stocks, because a lot of people unawares.
Yeah.
But fundamentally, I really can't justify the price at which it's quoting. So that's clearly out. I'll not be investing into Adani stocks
Okay.
unless it's. And among the new age stocks which we just discussed,
Yeah.
delivery, bazaar would be, clearly is on my buy list. That's where I'm
Okay.
buying it. And
Okay.
as far as, yeah, and
ITC, what about ITC? That's been a performer, do you
ITC,
think? Yeah.
ITC, I will not buy at the current levels. But then about a year back, when everyone was making fun of ITC, that was the time I said could be a good time to buy. I, I mean, I, I did not know that it can move up in 6 months, but clearly there was value at
Yeah.
200, 200 levels, and we bought, and we are still holding on to ITC because my target out there is 200.
Okay, so ITC is still at 342. We've just seen that last few minutes uptick right there. Thank you so much, Mr. Baliga, for being with us on this show and sharing the insights about markets and the specific sectors and stocks that we've spoken about. Thanks a lot for joining us for this show on this show. Let's quickly move on to see how the markets are closing at this point in time. Let's move into the closing action at this point. So we are just off the lowest point of the day, about 400 points down, 62,158 as the current level for the Sensex. The Nifty perhaps is shutting below that 18,500 mark, 117 points gone there. 0.6% of a decline is what you're seeing on the major indices. Let's also bring up some of the other major indices like the Nifty Bank at this point in time. The Nifty Bank has in fact moved up into the trade. If you see, it's now positive. It's 0.1 or 0.2% up in trade. Yes, you can see that last few minutes action that you've seen, a pullback that's also helped the markets recover from the lowest points of the day as well. So what's really moved up? It's the financial services that have actually come into the green perhaps, because the PSU banks are big time laggards today, almost 2% down. The private banks are flattish with a negative time, but you can actually see the financial services, which is now moving up into the green as we speak. Also, apart from this, there's the FMCG stocks that are definitely the clear winners in today's trade. 0.8% of an uptick can actually be seen there. The pharma stocks are also up in the trade today. Pharma index at 0.5% uptick. And these three indices are definitely helping the markets really close away from the lowest points of the day. But definitely big drag coming in on the realty pack, on PSU banks and on the IT space. That space has really seen some massive dropping in today's trade. Almost 0.7% cut for the media stocks, and the auto space is also down by 0.25% odd in today's trading action as well. Also the broader markets, let's look at that action too. The Nifty Midcap 100 index closes almost 0.4% down in trade. Over 1% cut for the small cap 100 index as we speak as well. So I think that's the closing level that you have. 127 points down for the Nifty Midcap 100, 32,376, down by 0.4% odd right here. The top gainers in trade today, the ones that were holding the fort up in the green: Nestle, Eicher Motors, Dr. Reddy's, Titan and Hindustan Unilever. So some of those FMCG majors really holding up, but the defensives taking some kind of a holding of the fort right there, over 1% gain for that one. On the downside, you do have the tech majors that have seen massive drag. HCL Tech, Tech Mahindra, Infosys, Wipro, all down upwards of 3% with HCL Tech down 6.5% and a massive cut right there. UPL also down by over 2% odd. So that's the closing level for you. The Nifty has shut shop below that 18,500 mark. The Sensex down by 389 points, 62,181 as we speak. All right, and with that, we wrap up this edition. Do stay tuned on to with us on Business Today TV to catch all the updates from the world of business and stock markets. Don't forget to subscribe to this channel and also stay connected with us through all our social media handles. That's Facebook, Twitter, LinkedIn and Instagram, and you can constantly engage with us over there as well. Thanks a lot for tuning in for now and hope you have a great weekend.